Welcome, everyone. Thank you for tuning in to our fourth episode of ARIVE Tenacity Talks. Football season is all over us. NFL regular season is ending soon. College football bowl games are heating up. You should think of this podcast as your game day playbook, where we huddle with industry MVPs to help you craft strategies that can keep the drive moving forward and help you win. Today, I'm really excited and honored to have someone with me that I truly consider is a star quarterback for the entire broker channel. He's my good friend. He's a top loan officer. Ladies and gentlemen, please welcome Tom Ahles, president and co-founder at Edge Home Loans. I hope, Tom, that's your title,
Yes,
and also president of growth at AIME. So thank you so much for taking time to join us today.
absolutely. Glad to be here. I know I've listened to the previous ones, and you've done a great job of getting industry leaders and bringing people together and elevating. I love it, elevating your edge. So
Yeah,
it's a good spin on
absolutely. No,
words
no
there,
pun
but
intended.
excited for our partnership and looking forward to a great 2025.
So, Tom, our relationship goes back many years. Like you hinted, I've been pestering you for now 2 years to bring your company on Arrive. It's great to see that play design is finally happening this month. So, thank you so much for your trust in Arrive. We are super excited about the partnership. But I want to start and kick this off with, tell us your background, give us your story. How did you join the mortgage industry? What really inspired you to start Edge? Tell us anything you can share with the audience.
Absolutely. Well, we'll try to keep it short because I've been in the industry since 2001, so we've had some ups and downs, and it's a fairly long story. But initially, I got into the mortgage industry in 2001. Prior to that, I was in, I'll say, the entertainment industry, right? Nightclubs, restaurants,
Cool.
customer service. Really liked that, right? I got into it directly out of school, and it was my calling, right? I really like being into where the action is. If it was a party and running the parties, it was something I was always good at. So, however, it wasn't very conducive to having the lifestyle that I wanted, right? Being married, having a family, um, you know, just stability, right? I would say that for a while, for 4 years in a row, I traveled and I was in a different hotel 2 weeks at a time. Didn't own my own pillow. Didn't own anything at that point because everything was still my parents' address, and really wanted to start to create some roots. Then I came to Minneapolis begrudgingly, and it was December of 2000, I guess. Right, it was New Year's Eve, and I remember like I was fighting it. I did not want to come here because I thought it was like Antarctica, right? And the weather here is cold, and why would anybody go to Minnesota? Well, what I found is that I really like it, right? I think even though the weather is a little chilly, I would much rather be in sunny Southern California like yourself and some of your past guests. However, this has been home for me, and I've really enjoyed it. So, getting into the industry was, like most of us, I don't want to say by accident, but it wasn't something that was thought out more than being in the entertainment industry. I saw the people that were coming in and spending a lot of money and seemed to have kind of a lifestyle that I wanted to have of, if they wanted to go out and have a good time and spend a couple $1,000s, that they had that residual income or ancillary income to be able to do that. And I would started questioning, like, what do you do? Oh, well, I'm in the mortgage industry or I'm in the real estate industry. So then I started thinking, like, okay, well, tell me about this. Like, what do you mean you're in the mortgage industry? Well, it's pretty easy, right? We sell money. And I remember when I heard that the first time, I'm like, you sell money? Huh? Like, well, what do you mean you sell money? Well, like for mortgages, you don't actually ever see it. Although, if you look at it from a sales perspective, if I'm going to be in the industry of sales, which I always like sales, um, why not sell the highest ticket valued item that the most people use, right? I mean, the average home in America, I think right now is over 400,000, right?
Correct. Mhm.
Compared to any other industry, sure, there may be some super yachts out there and things, but who's buying those, right? It's the 0.001 where the majority of people own a home. So
Yeah.
my initial entry into it was, for a lot of us, I just kind of stumbled in. I got a telephone book, and here you go, right? Get after it. And I was a little bit like, okay, well, how do I do this, right? How do I? And luckily for me, day one, I was surrounded by some really good people that actually still work with me today, which is pretty awesome. I think there were two
Yeah.
people that I sat next to. One was he's a processor for me now, Fred Rogers, and then Jake Kornberg, who's a loan officer, who's been with me since day one. But they kind of like showed me the way and helped me. As a lot of, I would say, a lot of us as originators, even why I love being a part of AIME, right? I love helping people. I think that's where even this industry has given me that fuel to be excited about what we do, right? I'm not, obviously, we get to make some good money, which is great. But at the end of the day, if I was making good money, but I wasn't helping people, my cup wouldn't be filled, right? I would have to be looking for something else where I feel a good call to service. So early on in my career, it was really about finding opportunity, right? It was 2001. There was a lot of business, but I didn't really like the call center environment, and that's what I was thrown into, right? I got here's a bunch of leads. The first company I worked for was Nova Star. If anybody remembers them, they're actually out of business. They're one of the ones that were on the implodometer. But I would get leads that would just come in, and it was fairly easy. I mean, I'm having a conversation with people to where it didn't necessarily feel like sales. It felt like, hey, here's an opportunity to save money. Instead of you paying 2,000 a month, I can pay 1,800 a month. All right, great. Send me the paperwork. And it was very easy for me. I think primarily because it was communication, right? And although, as my wife would say, I'm a man of few words sometimes, you find people that align with who you are, right? And what you like to talk about. For me, I don't want to, and you can probably tell this from the last 2 years of, I'll say trying to
Haggling.
get our business. I'm not a big talker when it comes to short talk. I like to just try to get the business, get down to what it is, and move on. So for me, I found clients that were that way too. And after a while, I got into a niche of using the connections that I had from the restaurant and nightclub industry to say, hey, listen, let me help you and invest into real estate. I would go and I would go down to the local courthouse and I'd pull county court records on foreclosures and find people that were about to lose their home but had a ton of equity. And hey, do you want to sell your house? Or you're going to lose it to foreclosure? Yeah, we do. Okay, great. So I would be able to help my investors buy it. No real estate agent involved. It was a really good way that I built a portfolio up to help, one, the people that helped me in my prior industry, and then two, now I had my own book of business. So I did that for a while, bounced around at a few companies, right? Early in the early 2000s, started my own in 2004 that we focused on. I went to consumer direct. We were sending out mailers. We were doing the trigger lead deal, just, always driving business. And it went really well until obviously 2008 happened. And then it was like the faucet shut off, right?
Yeah.
So I learned a lot during that time. I look at, to me, I look at struggles in our life as opportunities for growth, right? What happens when you get punched in the face, saying proverbially in this aspect. But the fact is, all of us, especially you as an entrepreneur, I mean, I've known you long enough to know that you've taken a couple shots, right? There are things that, as an entrepreneur, never go as planned, things that you didn't quite think about. But every time you experience one of those, you get to come out on the other side a little better. So
Yep.
2008 hit me in the face, went out of business. That's when I also met my wife. And we, shortly after meeting her, we're like, let's just start over, right? We left. I moved back to Ohio, where I'm originally from, stayed there for about a year and a half. My daughter was born shortly after that. And I was working for a couple of companies on the East Coast at the time. I worked for the Money Store, which is still in existence today.
Hmm.
But kind of the same thing, to where I didn't really have the connections there because I was here so long and knew everybody. That I didn't love it, right? No offense to my friends in Ohio, but even the average loan sizes were like 110, 120,000. And when you're selling a product, I'd rather sell it at 400 grand than 100 grand. Um,
Absolutely.
so we moved back here December of 2010. And from there, I got back into, I remembered what happened in '08. And then I started looking at numbers, right? And I started to see, I went out of business in '08. What was there business being done? And there was a lot of business being done. It was purchase business and it was relationship business, right? As prices and properties were losing value, there were investors buying it up, right? If you bought a house in 2008, 2009, wow,
Wow.
like flashback, I remember I was part of a program called Path to Buy, right? This was a thing trying to get people to like, it's a good time to buy. People were so shell shocked, 2010, they were still like, well, I don't know if the bottom's hit yet. I'm not buying. To where it was like, well, in a 5 or 6 year period, a lot of people doubled or tripled their house values in those years, right? Um,
Hmm.
but I started working for a bank, right? I worked for a bank called Waterstone Bank, based out of Wisconsin, and they taught me a lot, right? I learned the referral purchase business, and I wasn't there long, maybe 8 months, 9 months, but long enough to see other people that were thriving and thriving without leads, thriving without, they were the business, right? The bank at that point was the one helping them with underwriting the loans, doing their payroll, whatever the case was. But I really felt like, man, I remember on the broker channel, things used to be, I don't want to say easier at that point, but I had more options, right? Even from an underwriting perspective, to where I would get opinionated underwriting at the bank. And I knew, like, well, that's your opinion. That's underwriter discretion. I don't agree with your opinion, but I was stuck, right? And at that point, I started referring deals to a buddy of mine, Chris Hacker, and
Oh, I see. Is that how you met Chris at
that
that
was
time? This
how,
is
right?
good.
Jake, who is still with us today, was good friends with him and knew him because he used to work for him prior. Chris had a company. Our stories kind of aligned from our past in the industry, and I was sending him the deals that they couldn't do, and he's closing them, and he's making twice as much money. And I'm like, okay, this doesn't make sense, right? I really loved the fact that I was surrounded by so many high producing, self generating loan officers. Yet I was limited, right? I was limited to my product offerings, limited to what I could actually pass through from overlays. And at that point, we went and worked. Chris and myself worked for a small company out of Las Vegas as a broker, and it was going good. And then we're like, you know what? I think we should just do this on our own, right? We don't need someone else. And as a lot of you know, it's fairly easy to start a mortgage brokerage, right?
Mhm.
I don't want to say running it is easy. Nowadays, if I would use the word easy when we're to the size we are with audits and everything else nonstop, far from easy. However, getting into it is fairly easy. So 2011, we opened up Edge Home Finance. Chris worked out of his basement. I worked out of mine. And then I opened our first office. And I never, our intention at that time was fairly simple, Harish. It was like, you know what? I don't ever want to rely on someone to make a paycheck ever again, right? Because prior for my company and Chris's, it was all about managing the staff and trying to get a return of investment. We're going to spend 30 grand on leads to try to make $10,000 back in profit, and it was always putting myself out there to spend money to make money. And I looked at self generating business like I don't need to do that, right?
Mhm.
All I have to do is, network with people. And instead of them walking into their bank, why not use me? I'm going to make sure that they have good service, that they're accountable. And what happened was it worked, right? I started
Yeah.
closing a good amount of loans, had a good referral base. And then I would have friends that I knew over the years say, hey, Tom, how are things going? Yeah, things are going great, right? I really like it. It was still a little clunky back then in the early, 2010s. Technology wasn't where it is today, but we were still able to deliver. I'm big on acronyms, so I use the word CARE a lot. Create a referable experience, right? Everything that we try to do in our business is how do I create that referable experience? And I was able to do it. Then I would share that with someone that I work with. Well, hey, can I come work with you? All right, well, fine, right? Well, but I don't want to be in management. However, we have to keep the company afloat. We'll charge
Yeah.
$1,000, right? Charge you $9.95 a file, but we're not providing you leads. We're not providing you any of these things. And it was kind of the start of what was really, in my opinion, kind of broker in a box, right? If you look at a lot of the mega brokers, I think a lot of them have done the same thing. I think I'll give a shout out to a mutual connection of ours, David Temko, right? I think his dad was one of the very first ones, as I've learned the history of what we do, one of the first ones with like a flat fee model. But the reality is it works because if you can run a business good, then what is our job as an owner is to make sure that one, we're good business owners, right? We process payroll on time. We're always doing everything correctly in the way you run a business. And it was very easy to scale almost naturally, right? So we scaled.
Yeah.
I don't want to say quickly because when you start out with two or three people, you grow to six and you doubled your company 100%, right? So it was a slow growth in the first couple of years until one day, um, I remember this because I was over at Chris's house and we were chatting about the future of what we wanted to do, and our opinions differed a little bit, right? And he was still a little shell shocked from 2008, and I've always been I want to go big or go home, right? It's just kind of how I am. I'm not afraid. I would say most entrepreneurs like yourself, not afraid of risk. I know what it's like to have nothing, and I know what it's like to have a lot. I've had it both, and it doesn't. I'm still the same person. I'm still in the same skin. Money and success doesn't define you. However, my happiness comes from achieving results that I want to be able to achieve, right? Whether that's professional or personal. So,
Yeah, that's a great story, Tom. I appreciated it, and thank you for serving the community. Thank you for serving the consumers. You've kind of redefined what success is, what brokers can do, and it's a perfect segue. Like Edge grew like doubled, if I'm right, over last 12 months from 3.5 billion to over 7 billion, and you told me you want to double going into next year. So the question becomes, obviously you shared some secret sauces, being transparent, flat fee model, anything else kind of you want to share which is giving you this edge to grow, and what kind of challenges you see as you are growing at the pace you're growing, and how are you kind of trying to overcome those challenges?
yeah, I mean, as we get to the size that we are, doubling gets a little bit harder, right? But I remember hearing that, and I heard that at the beginning of last year. And I said, well, wait a minute. you know, there are companies out there that are doing twice what we are, right? We have 20, just came out the new announcement today, where we have 27% market share, right? The highest broker market share since '08. But what that also means to me is that we have 74% of the marketplace that still is not operating in the best channel. So for me, the opportunity is there. When you ask, like, for me, what is the goal or difference? A lot of it is like we're not unique to the point where I've invented something spectacular, right? That's not it at all, right? But what it is, not everybody in this industry are good business owners either, right? And I'll say I'm thankful for that aspect. Is I have a partnership. A lot of times partnerships don't work. Mine works, right? I have partners that really, we all have different strengths, and we all leverage each other to make sure that one, that we're getting to our full potential as individuals, as leaders. Mine is different than my partner's, but I need that, because if I didn't have it, I might not be as good on the things on the back end as what he is, right? Or Chantel, right? Or Nick, who you've got to spend time with. Like, to me, it's like looking at the people that are around me and trying to fill in the gaps of where do I lack, and putting people in that place. So the company itself, when you come together, you mentioned Katie. Katie's one of our admin here, right? She's one of our onboarding. She fills in a massive gap for us, right? Nick, we have so many people to where the real secret is good people attract good people. And when you're intentional about what you're doing and you're honest and you can see that over time, that this isn't a flash in the pan where, okay, brokers are, I've heard this from the retail side, brokers are just doing good right now because rates are low. Well, wait a minute, rates go up and we're still now took more market share. Like at some point, you have to understand, similar to how, Blockbuster felt probably when Netflix was like, well, people aren't going to go that route. They need this or this. That's not the case, right? At the end of the day, if you can deliver a product cheaper and faster, consumers are going to want that. It's why Amazon is successful. You look at every company out there that has been able to deliver a product cheaper and faster, they're going to win. And, you
Abs-
know, grateful for us, UWM has stepped up massively and changed the industry for everyone else below them too. So where everybody's winning, right? We talked about technology, right? Even this leads into even why, for me, I want to tread lightly on this because I respect my partnership that we had with our last LOS system. However, we have to do what's best for the company, right? And I think a lot of business owners look at things a little too personal to where, for me, the company is a separate individual, right? What is best for the company? And to me, that's why we're excited to partner with Arrive, because if I'm going to double, I can't have anything less than the best for my team.
Yeah, no, we so much appreciate that, Tom. And I totally agree. You have a phenomenal team in place. We are so excited to work with them as you guys switch LOS. It's a pretty big decision at your size and scale, and so many users, and every loan officer is kind of independent, like you said, broker in a box. So how do we get them over seamlessly? So we are super excited about this. And like you mentioned, this morning broker market share was like more than 27%. That is
Yeah.
so awesome. I think I'm also kind of new to this channel. Like Arrive is a little over 4 years old, or about 4 years old. So we started with maybe a dozen people. Now we are like 140 plus. So you can calculate our growth, and my company has doubled in terms of every year, like number of loan officers and loans. So we are all in this channel. I don't work with retail and consumer direct, all that. So all our energies are focused, and that's one of the reasons we're able to grow with the community. And I find it personally very unusual or remarkable that brokers are willing to share their best practices, their tips and tricks. They're competing with each other, but they are still willing to open their hearts and share their playbooks, like you are doing right now. You won't find Bank of America
No,
and Wells Fargo, share their secret sauce, or you won't find IMBs like Guaranteed Rate or whatever, like Fairway and
no,
Movement Mortgage.
doesn't exist.
They're kind of competing. It is, when I think back and say, oh my God, this community and this spirit of rising tide lifting all boats, that is so exciting, so valuable, and that really drives us. Like we are in a growing market. We are working with people who genuinely want to help each other, and that's the reason we push forward. And why do you think that happens? I sit back and think, why does I'm helping someone who's actually competing with me? Why does this mentality happen? Do you have any thoughts on that?
I do, and it may, one, I like to consider myself a transparent person. So I'm going to be 100% transparent with this. 27% market share. That's not that much, right? When we get to 80%, the table manners will change, right? It's just like right now, there's enough food on the table for all of us to eat. And the more that, to me, I even look at this from a lender's perspective, right? We're not a lender. I'm the only broker that's still in the top 20, even, that operates like a true broker, right? I don't do any mini core or non delegated. But you look and see when UWM grows, guess who else grows? Everybody underneath them. Everybody's eating, right? So for
Yep.
me, it's not a situation of I don't compete with any brokers ever, really, right? I mean, it comes down to it to where they're not the competition. I joke and call them frenemies. They're friends, but at the same time, yeah, at some point, the table manners will change. Okay. But right now, that's not the case. Right now, the rising tide raises all boats is accurate because we're at 27% market share. We get to 80, and things might tighten up a little bit, you know. But when it's not, you know, the smaller guys have to stick together, and it's one of the things that when I look back to 2008, right? Why did mortgage brokers take the fall? And what was there from a collaboration and cooperation with all of other mortgage brokerages? There wasn't. I didn't even know another one, right? I really didn't. And there was nothing connecting them. To me, it's one of the reasons I've been grateful for AIM because now, you know, I get the opportunity. I just finished, we hold a Discover Wholesale, which is like basically our retail to wholesale. How do we continue? What are best recruiting strategies with a lot of the top brokerages in the country, right? Nexa was on that call, Empire, you name it. I have a lot of the top brokerages that are on that call to where, like, for us, how do we get to 30, right? Because I guarantee you, if the channel grows, we grow, right? If somebody, like, you know, even if we're looking at somebody comes to my company is not a good fit, I refer them to my frenemies, right? I also, there will be people that leave other companies. I don't celebrate those wins, right? We just got a very, I'll say, large producing loan officer that switched from one broker to the other. I'm very happy that she's with us. However, it's not a win for the community. You're not going to see me put a celebration post out there like, you know, hey, we just took 60 retail loan officers in the last 30 days, that we made a massive difference, right? We made a difference in their lives to where, one, they're probably going to stay in the industry, they're going to make more money, have more options. That's a win, right? So, for me, it's more, you know, at this point, really, it's like, how do we work together as a team to make sure that what happened in 2008, that we're not the scapegoats, or more importantly, you know, we're still the small guys. Banks own this industry.
Yeah.
And so without that collaboration and cooperation, we are subject to being blamed and being really, you know, stories made up. And that's another thing. AIM came out with that HMDA data, right? Like, here, and actually it wasn't, maybe it was AIM, maybe it was UWM. I don't remember. One of us came out with it to where here's the average savings for a consumer that's using a mortgage broker compared to an IMB. Well, that's a big number. These are factual things to where before we had any sort of rallying of companies like this together, those things didn't exist, right? There was no brokers even over 100 people. So to me, it's, you know, we're stronger with our numbers together to where if there is something that happens, you know, let's get 10,000 of us together and say this is what's going to happen. And I'll even give a shout out to Anthony Casa on this, right? That's what happened with Brawl. He started out kind of gangster with it, you know, to be honest with you, but that's what was needed at that time, right? We were being kind of pillaged and used for not what brokers were supposed to be. And he changed it, right? He said, listen, I remember my first call from him. This isn't okay, right? And if you look at what that's done now, and that was probably, I don't know, 7, 8 years ago, 9 years ago, the industry's changed now. Now people say, you know what? We want to partner with mortgage brokers. We don't want to just buy your loans so we can take your clients. We know who the partners are.
Yeah, no, absolutely. I think to your point, like, this broker channel has come together like never before. You know, to your point, even I was introduced to this concept of a broker back in 2018, 19 when this brawl movement started, and you know, I got excited. I went all in. We stopped everything else, and you know, just like you said, with brokers coming together, the community has grown. You know, our product has grown, so we want to kind of grow with the ecosystem. So as you rightly said, when we get to 80%, that's music to my ears. Things may be different from a table manners perspective, but given, you know, how the channel is growing, markets have been rough for last couple of years, right? You know, the rates have been high, the purchase market is what it is. Any actionable strategies or tools and tips you can give to our audience, let's say the brokers who are listening in, what should they do in their business? How can they bring new value to their clients, to their referral partners? Anything they should change or they should look to improve? Anything you would suggest?
You know, I don't think this even applies to necessarily just the mortgage industry. It even applies to you. Consistency, right? You're almost consistent to the point to where you were annoying for a while, right? Then I'll just be transparent with it. But guess what? So much UWM. UWM used to call me after I told him to never call me again. And what happened? Well, finally, I started to see why. When somebody is consistent, it means that they care. I'm going to win no matter what. I'm going to make sure that I'm the very best. So, as an originator right now, if you're looking at 2025, what are your goals? You should be meeting 10 agents face to face every week. And if you have the consistency with your business plan and you're not making excuses to allow yourself to fail, success is the byproduct of consistency, right? No matter what industry, no matter if you're building something from scratch, you're building a home by yourself in the middle of the woods, right? You're going to look at it and see, how am I going to do this? Every day, you're going to get up and you're going to get a little bit better. You're going to get a little bit further. So to me, it's really, still boils down to the 80-20 rule. We'll have 20% to an 80% in this business, but that 20% has one thing in common: they're consistent, right? They are consistently working every day on prospecting, on making their customer experience better, on how to improve. It's not like, even for us, I don't know where numbers will fall this year. Mike and I have got into arguments. Yeah, I'm number one, number one. Don't really care, right? The fact is, I'm not stopping, and neither is he, right? Let me compete with somebody because I'm going to continue to be consistent. If I'm going to do it a little differently, then good. We all need to be a little different because, not to get too spiritual, but God made us all differently, right? And at the end of the day, I don't need to be anybody else other than me. And who I am is somebody who cares, somebody who works hard, and somebody who can be accountable, right? And that isn't going to change. And if I do that every single day for the next 21 years, I want to stay in this industry. If I'm not number one, I'm going to be damn close.
Absolutely. That's that magical word of being consistent and keep pushing forward. It is so important. Things will happen in this business. Change is the only certainty, as we say. So markets will go up, they'll go down. But if you're consistent and you're focused, as you rightly said, I was running after you for 2 years, so results do show up. So again, thank you for the opportunity. I think we are kind of at the end of our podcast. I want to ask you some interesting personal questions,
Yeah.
and we have not prepared them, so we'll see how you respond. You talked about somebody punching in your face many times, right? Like, as you're an entrepreneur, you're almost always on the edge, if you will, and this is my reference to the famous song "Living on the Edge." Can you think about a few instances in your life where you actually lived on the edge and you had to make some bold decisions, and how those propelled you forward?
Yeah, I mean, there's been many occasions, right? Even as an industry, there's been some, right? Tread when it happened, right? Because we were operating prior to that happening. Like, that was one of them, to where you watch such a mass exodus to where, like, oh, what are we going to do, right? I might have to join a bank. I might have to. But it reminds me, and in one of your past guests, I'm reading his book right now. Glenn Stearns was on there, to where every time, and I resonated this a lot, every time that I'm hit like that, to where I have to come up with a solution, at some point it's going to pass. And it goes back to the same thing. If I'm consistent, if I'm authentic with what I'm doing, I'm going to find a solution. And even if it's not the one that I like, I'll get to the other side of it and I'll look back and I learned something. I'm grateful that I lost everything in 2008, right? Because now I have a different appreciation for what I do have. And I also have been able to help people. Like, probably one of the best things that I can think of, we had AIME, Hall of AIME, down in Fontainebleau. And I remember giving a presentation about running a recession proof business. And I think from that, there were probably 25 people there that I know that either started or changed their companies that I've watched turn into millionaires, right? I wouldn't have been able to touch anyone if I didn't go through the pain of what I did, right? To the point to where I literally lost everything, right? Had to fly back to the coop in Ohio and kind of stay close to where my parents were and restart. But without that, I wouldn't have gained the real world knowledge to understand, what? There might be a different way to do this. There's going to be a better way where I don't need to have so much risk to make it. Because for a lot of us, especially in the broker channel, it's not like we came from, I didn't have an extra couple $1 million in the bank to start off life, right? So Outside of that, I don't know. That was probably the biggest punch in the face was '08, right? Had to file
Yep.
bankruptcy, had to start over. Literally, my ego was completely
Yep.
deflated to where sometimes, and I even had my video guy say this to me, is like, I don't want your image to be edge. And I'm like, well, part of me is I'm all in when I do something, right? It's not necessarily, I want to say my image, but I believe in it, right? It is. It's not a shirt that I wear. It's not a company that I run. It's the culture that I've created and that I continue to see that ripple effect. Like for us, why do we keep growing? How do we get to 1,500 plus employees when I don't market? Everything is word of mouth. Attraction
Yep.
rather than promotion will continue to propel us.
Absolutely. So I just thought of another question since you brought up trade and how you got punched in the face. So assume one day you wake up and let's say all regulatory oversight is gone. The Department of DOGE comes into effect and they delete CFPB. What change would you see happening in the broker channel if that were to happen? One day when you wake up.
Well, one, I hope that doesn't happen because I think that
I
there
just thought
is.
of this question.
I
I don't know how out of box.
I
So
think
so
there's been a lot of good things that we've had with, Dodd Frank trade, things that were a necessary requirement for our industry, right? When you look at the amount of money that people make in this industry with just a 20-hour education barrier, it needs to be there, right? There needs to be background checks to show people demand, are showing the
yeah.
respect they are to lead other people. So for me, I don't know, right? I think crooks are going to be crooks regardless if there's police, if there's oversight or not. The good people, right? I want to work with them, right? Like to me, I'm not threatened by regulatory. What I want to know is what do we want to do and open up the communication because to me that's the hardest part right now. There's a lot of us in the broker industry that are unsure about things, right? What's the stance on this? What's the stance on this? Well, here's my opinion, my opinion, my opinion. And we got 13, 15 different opinions, but nobody knows. And we're supposed to dictate this off of regulation that isn't clear, right? So to me, what I'm hoping more than anything, instead of it just being gone, have it be about open communication, right? Instead of being happy and posting, oh, we fined this person $2 million for doing this. We find like if you look at the majority of, I don't want to get in trouble by making anybody mad here, but if you look at the majority of regulatory agencies, they celebrate fining people more than they do coming together and saying, hey, we actually want to help you guys, right? We want to help you to make sure that we are protecting consumers. We want to help you to understand this is the guidance that we feel on this, knowing that, some of these agencies were created when the broker market share was 3%, right? There were one offs to where let those guys be. They're going to go out of business. And it's been banks and credit unions and brokers now that we're getting to 30% market share. There's going to be more eyes on us, right? But it's good. But communicate, right? Don't just come in and try to enforce us. If I want to look and see, hey, I know when I'm driving, if I get pulled over, well, the speed limit said 55 and I was going 70. Pretty dang clear, right? Scary part of our industry is sometimes we don't know when we're getting pulled over what the speed limit sign was because it's not there or it's in a different language that we can't call and clarify what it means.
Yeah, no, absolutely. I just came up with this question out of box, but yeah, thank you. You had a good answer. I think to your point, if regulators could be tuned to where they're helping others be successful and compliant rather by checking how much did they find this year, that's a good mindset to have. So my last question to you is when you're not producing loans or helping the community, how do you unwind? I know you're big in golfing, you do biking. Are there other hobbies and interests you want to share with our audience?
I like to play poker.
Okay, good.
It's one of mine. It's one of those games to where I'm still socializing, but I can be quiet too, and I get to read people. So I really enjoy that. Obviously, exercise is like a necessary evil. Like I want to say I like it, but I don't know if I do. I just have to because it's you have to take care of your biggest asset, and that's your health. So
Yep.
sometimes I struggle with it. So it's like I don't know if I like it or not, but it's necessary, and if I can do it and have fun with a group of people, then it works for me. But I would say, golfing, I like to play poker. Occasionally, I like to play craps.
Interesting.
But that's about it.
All right, Tom, again, thank you for sharing with our audience how can they elevate their edge and become successful. But we appreciate your time. We appreciate everything you do for the community. Thank you so much.
Absolutely. Thank you, Harish.